You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music can mean only one thing. It is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. Do you know where your futures and your futures options are? Well, let's find them together. It's time for TWIFO. This Week in Futures Options, a program where we break down everything going on the other side of the fence. Going to talk some energy. Well, maybe we'll talk some fun ones in there like cattle and, of course, gold, metals, making all sorts of crazy numbers this week. And, of course, some equity vol in there as well. Interesting things popping off across the board. You never know what's going to make it on the show every week. That's why you got to tune in to TWIFO. If you guys have surprise products you want us to break down for you, we're happy to do it. Hit us up. You know where to find us at Options, most of the major social media platforms, or, of course, via our live chat. Those questions get bumped up to the top of the list. So if you listen in live, you get special treatment. And, of course, you can always hit us up, questions at theoptionsinsider.com as well. That all makes its way to us here. And, of course, if you like what you hear on this program, any of the programs on the network, make sure you leave reviews on your platforms of choice so new folks can continue to discover these shows, particularly in these trying times. It's more important than ever. The whole network's doing about a dozen different programs to keep you informed, keep you updated, keep you enlightened about what's going on in the world of options. And, of course, TWIFO doing that on the futures options front as well. So keep those questions coming, those comments coming, those reviews coming. We love to hear from all of you on all the different platforms that you guys consume the show. And see who else we're hearing from today. It's return of the Stallion, my old cohort, my partner in crime here, Mr. Sean Smith, the managing director of derivatives licensing over there at FTSE Russell, back in the FTSE Russell hot seat after a well-deserved bit of vacation. Mr. Smith, welcome back to the TWIFO program. I'm glad to see you survived your sojourn to the South, sir.
Thanks, Mark. It's good to be back. Yes, survived, all healthy. We stayed COVID compliant and all back and hitting on all cylinders. So looking forward to a great show today. So thanks for having me.
We had your buddy, Mr. Dan Gramza, on the show last week. He was very sad to have missed you, sir. So he wants to come back on again when you're going to be on the show. We'll have to make that happen, Sean.
Let's definitely make that happen. I'm a huge Dan Gramza fan. He's just a fantastic evangelist of this business. He's an educator. He's a consultant. He knows the space across all asset classes better than most. He's a wonderful person. So I'm sure you had just a great show with Dan last week, and I'm sorry I missed him. So yeah, I'm looking forward to doing a show in the near future with him.
All right. In the meantime, you know what we have to do first. It's that time of the show, listeners. It's the movers and shakers. Let's see what's lighting it up over there at CME Group. In fact, speaking of CME, you guys can play along with the home game. You can, of course, always listen to the shows live via Mixler or after the fact on podcast. You can also generate your own free reports to accompany the show, and they're live all week long. You can do it whenever you want. CMEgroup.com/TWIFO or /TWIO, TWIO. Both of those should work. It's live. It's free. If you want to check up on your fluid milk at 2 a.m., have at it. No one's going to judge you, except maybe your wife. She might say, what are you doing? Why are you up at 2 a.m. checking fluid milk? But outside of that, no one else on this network, at least, is going to judge you. CMEgroup.com/TWIFO or /TWIO is the place to go to continue your journey outside of listening to the show. All right, Sean, you know what I'm going to ask you. Should we go light side or should we go dark side this week to kick it off, sir?
We're going light side. I'm back to my bullish sentiment.
You're back. A little bit of vacation, you're rested, and all of a sudden you're feeling optimistic all is right with the world, sir.
Getting better. It's getting better.
Getting better. All right. Well, then let's see. Light side, of course. This is actually an interesting week, and I've said it before, listeners. Usually when we're running this segment, and you guys can do this for yourselves, of course, on those market scans functionality for yourself. Remember to set the date back to our previous show date of last Thursday, and off to the races you go. Usually it's heavily biased in one direction or the other. Like the last few weeks, it's been a lot of upside. Mostly, in fact, last week we had a struggle to find 5 names that were in the red on the week. That's how biased it was. This week, it's almost exactly 50-50, half green, half red. So interesting, more egalitarian week out there, more spread out in both directions out here. All right, light side, let's do it. Number 5 on the big upside movers of the week. Let's see, live cattle back on the light side. They're up about 1.6%. Last week, it was number 1 to the dark side, off about 1.5% to the dark side. So it's been swinging a little bit. Week 2 weeks ago, it was number 2 on our list to the light side again, up nearly 7%, 6.7%. So there's been some volatility of late in live cattle. Maybe they're going to fight their way onto the show this week. We'll have to stay tuned. Number 4, of course, gold. Gold's been dominating a lot of the headlines out there, hitting record levels across the board, up 1.89% this week. Last week, it was number 5 on the upside, up 5.4%. So a little bit of a more mild week than last week, but still a good week for the gold bugs out there. Number 3, we were talking FX with Dan on the show last week. We got pound dollar coming in number 3. Don't see a lot of FX on our list. Maybe we got to sneak in some FX this week as well. Up 2.28%. Numero dos here, the old big dog, the Eurodollars, up 6.25%. Last week it was number 4 to the upside, up 5.77%. So Eurodollars have been moving. And the number 1 with the bullet this week, back at the number 1 spot, is lumber, up 11.1%. Last week it was up 1.0%, 1.01% actually. That made it number 23 on our list of upside, but it was number 1 again 2 weeks ago. So lumber has been moving. Now, before you get all excited and say, hey, let's start with lumber, I wish, but unfortunately, as of the show, it's done a whopping 123 contracts this week here on the lumber side. So unfortunately, not a lot of options, volume, or unusual activity to really parse here on the lumber side. Let's go to the dark side now, listeners. Number 5 to the dark side, rough rice, off 3.68%. Number 4, heating oil, going back to the energy sector. Heating oil off 3.69%. So just barely edging out rough rice. Number 3, RBOB, once again in the energy sector. RBOB off 4.62%. And then we go back to the metals. Number 2, palladium, giving back some of those gains, off 6.57%. Last week, it was number 3 to the upside, up almost 10.5%. So it's been wild swings in palladium of late. That means number 1's got to be moving, and that's platinum, off 7.11%. Last week, it was number 2 to the upside, up nearly 16%, 15.93%. So metals have been moving. But Sean, since you're back from your vacation, we haven't had a chance to actually talk equities on the show in a couple of weeks here. So what do you say, Sean? We start off in your neck of the woods looking at the equity side. Sound good?
That sounds music to my ears.
All right, let's set the table here. Coming into showtime, we saw our old friend RVX, which is, of course, the VIX of the small caps, aka the Russell 2000. Not quite 32, a little bit shy of 32, about 31 3/4. Still rich, still elevated compared to what we see in the large caps out there in VIX land. Even though that puts it down a bit from last show, down almost 1 3/4 points from last show. Our old friend, the VIX, coming into showtime, VIX cash was at about a 25.5. That puts it actually up about 1.5 from last show. So RVX coming off ever inflated levels and VIX coming up a little bit. So as a result, that spread has widened. We've talked on the show. That spread last show was about 9.25 points. It's in about 3 points now. It's about 6.25 points. It's still wide. It's still north of that average, which is around 3 to 3.5 points, somewhere in that range. But it's certainly well tighter than it was a few weeks ago, and it was about 14 points. That's because small caps seem to have quieted down a little bit out there. They're still up pretty strong. They're up about 2% net on this week, but not enough to break into our top 10 movers and shakers. Sean, I know you've been on vacation, but before I break down some of the options activity out here in all things Russell 2000 and the vol and the volatility and all that good stuff, the skew, what's been lighting up your tape in small cap equity land, and what are you seeing out there as you're engaging with clients and end users hitting you up about all things small cap vol, sir?
I just I was watching CME's earnings come out this week, and I couldn't help but notice, probably the mentioned was the most successful product launch in CME history, that being the micros, of which, recently celebrated their 1-year anniversary. But the average daily volume is almost 2 million contracts in the second quarter. I mean, that's tremendous. And the Russell 2000 futures are trading on an average of 280,000 contracts a day. That's tremendous liquidity for small caps. So I'm really excited to see these numbers that got broken down in the earnings call. So equities are a powerhouse, and the markets will continue to be volatile, but really tradable with the liquidity you can get at CME Group. So I'm just really excited about that. It's just been a tremendous first half of the year in terms of volume, and open interest remains strong as well, right? Over 550,000 contracts of open interest. So I'm like, I couldn't be happier with the progress. And I always say this, but keep an eye on that Russell 1000. It's the large cap index. Folks, institutional investors benchmark to the Russell 3000, which would be the combination of the Russell 1 and the Russell 2. So that's our large cap and small cap indices. The Russell 1 trades at CME Group. So take a look at the Russell 1, RS1. I think you'd be interested in just seeing its price movement, its activity. Yeah, it's not that tight. It's not that strong of a big bid ask yet, but it's getting there, and it's definitely something that should have your attention. So yeah, I'm really excited about volumes. I'm really excited about the tradability and the liquidity in products, and it's the conversation that we're having, right? And we're getting into election season, so there's going to be lots of movement in our markets. So equities is going to stay one of those hot products to trade.
Certainly seems like that is the case, sir. Let's see what's going on in small cap land out here. Remember, you guys, as always, can follow along cmegroup.com/TWIFO or /TWIFO. I haven't broken it down for you guys in a little bit. We have a lot of new listeners discovering the network and indeed the program these days. So I'll break down this report for you really quick. We use the proprietary This Week in Options report for this show, coming at you courtesy of our friends over there in QUIKSTRIKE land. They were kind of the in-house tool provider for a lot of things CME does over there. If you're looking at this report for yourselves on one of those URLs, you'll see a couple of different columns over there. Of course, the symbols for the various months it starts off, then the days to expiration for the contract itself, then where the future is right now in the case of the Russell 2000 is at about a 1491.5, puts it up 1.99% or about 29 handles, so not quite 2%, but pretty darn close. Across the columns, you're going to see strike. That's, of course, where the at-the-money strike is right now. ATM is next to it. That's going to show you what the at-the-money vol is right now. Then the shift and slide next to it. That's where how much the skew is shifting and sliding. Kind of hard to break all that down in the time we have allotted in this show. That's a little bit of a more complicated discussion. I encourage you to have tutorials over there to explain to you exactly how they calculate that. Next to that, on the skew column, which we look at a lot, the 25 delta risk reversal, 25 delta call, 25 delta put. And then what we like to quote on the show here more often, because it shows you the rate of change, is the 25 delta quick skew. And that shows you where the 25 delta put and 25 delta call were a week ago versus where they are now. Since the show is called This Week In, that explains the shift, the change, the evolution we're seeing in the skew, which shows you how the paper flow is shaping up out there. And if you go across more columns, you'll see the OI out there and the volume, which is, of course, how we look at where the most active strikes are. Right now, this week, once again, in the weeklies, it's that front weekly contract in the Russell with about a day to go, doing about 40% of the paper out there this week. Let's see, we're at about 1491.5 right now in that contract. Looks like the lion's share of the trading was surprisingly, Sean. Usually we see out of the money puts dominating the tape. Right now it's 1495 calls going up tomorrow. So pretty much 1 day to go calls dominating the tape out here. That's kind of the biggest print. Let's look at skew wise. Skew, bit of a different beast, listeners. It's hard to look at skew with less than like a week or two to go. So I like to go out a couple of weeks. So we're going to go a little bit farther. Skew with 1 day to go is a meaningless number. It's just kind of nonsense. Let's go a little bit farther out. Tell you what, let's go out to where saner heads are prevailing out here. Let's go all the way out. Now, let's not go out deep. Not enough flow out there. Let's go out instead let's go out to the AUG contract that week 4 that still has let's go to week 3. That has about 22 days to go. Did about 14.5% of the flow. So some decent paper out here. The at-the-money vol out there was 28.67. That's come off about 2.25 points. So you can see how the vol evolves a little bit out here. The skew out here last week, the puts were 12.1% rich. This week, 12.9%. So the puts getting a little bit more juice, a little bit more life. Not exactly surprising. We've seen some topsy-turvy markets of late over the past week or so, mostly upside, but we have seen some red starting to creep in of late there in the market. So giving those puts a little bit of a lift, not surprising. The calls, 9.4% cheap to the at-the-money. By the way, lowercase p, uppercase p, lowercase c, lowercase c, and p mean cheap. Uppercase, if you're looking at this report, listeners, means expensive. That's how you interpret that there. The calls this week are 10% cheap to the at-the-money exactly. So the calls have come in, puts got a little bit bid. Not exactly surprising. Sean, anything surprising you out there overall in Russell 2000 options or volatility this week, sir?
Nothing too surprising, but I'm always I always make the catchy phrase: buy puts when you can, out when you have to. And you said that vol has come in a little bit, but it's and that spread has tightened, right? The volatility spread between VIX and RVX. So it's interesting times. I know if we had Rick Rosenthal on the show, he'd be talking about put verticals and harvesting volatility versus hedging. There's just tremendous opportunity to trade the Russell products on CBOE and CME Group. So yeah, I don't actually have an opinion when it comes to the actual transaction and trading, but we are surely in for interesting times here for the second half of the year with election season with us already. So that's all I'll add.
Mr. Sean, we have been talking a lot of metals of late. They were lighting up our movers and shakers to the upside and to the downside this week. Where do you think we hang our hats in metals next, sir? What say you?
Let's go for it.
All right, let's kick it off. Werewolves, lycanthropes, beware. We're kicking it off in the usually the number 2 metal out there, getting a lot of headlines of late. Maybe it's kind of the stealth number 1 out there, talking silver. out here this week. We mentioned it was having a good week. And, of course, our This Week In reports, unlike our market scans, which go back to our last show on Thursday, This Week In reports, which you can find for yourselves at the URL I mentioned at the top of the show there, they count from Monday, pretty much. So Monday throughout today. So this week in as of right now. And as of right now, silver is up almost 2.2% at about 23.35 right now in that front future over there. CME doing a big write-up breakdown over there on their open market side for silver, calling it the comeback kid right now, saying the silver traders have earned their summer break out here, seeing this, commenting on the remarkable amount of volatility and volume we've seen out there in silver of late. We saw the futures were below $12 a troy ounce. That was back in March, back in the teeth of the madness. That was a level we haven't seen since 2009, and now here we are just 4 or so months later. And we're back up at a 6-year high, hitting above 22 not too long ago. When I say right now, 23.35. So that puts it, timeless report, which was earlier this week, it had bounced up 80% since those March lows. And you can kind of parse it by two very distinct halves to the year so far. The first half, which is predominantly Q1, which showed pretty much mostly pre-COVID and the impact of it leading into the big sell-off there in the teeth of March. Remember, we said it before. We'll say it again here on the show. When things get crazy, everyone's talking about the metals now and how inversely correlated they are and what a great trade it has been. And that certainly is the case. But in the height of the madness, in the height of the sell-off in March, we've said it before, we'll say it again, correlation tends to go to 1. We saw that happen in silver and in gold. These assets that are supposedly flight to quality assets, they got annihilated as well. So when it counts, you got to really look in the options market. It's the only thing that's reliable inverse correlation, or volatility. Volatility is the other place you can kind of hang your hat. Outside of that, these supposedly diversification assets like gold and silver, not so much when you really need it. Longer term, after things have played out a little bit, yeah, gold's done all right, silver's done all right. But in that madness, in the maelstrom, when you needed it in March, gold and silver were not there for you. Silver was off 30% year to date by the lows of March. Both the assets were selling off, though, which kind of showed an interesting impact on what's going on with the gold-silver ratio. Gold-silver ratio at the start of the year was about 80. So that tells you how many ounces of silver you could buy with 1 ounce of gold. And it shot up. The ratio shot up to about 120 during the teeth of the sell-off. So you could buy 120 ounces of gold with 1 ounce. Oh, excuse me, other way around. I keep saying that backwards. You can buy 120 ounces of silver with 1 ounce of gold. Listeners out there. Now, of course, since silver has had this remarkable comeback, kind of outpacing gold even, we've seen that ratio come back down again. It's back in line with that historical average, which is about 64 out there. So right back around those levels. So we're seeing huge swings in the gold-silver ratio as well. Hence, CME dubbing silver the comeback kid out here. CFTC commitment of traders reports also showing huge influx of bullish flows from hedge funds and others into silver since the lows in March. That includes hedge funds, CTAs, other speculators out there. So folks liking themselves a little bit of silver. Of course, silver also has some interesting impacts as a result of this current corona environment we find ourselves in right now. Because silver, a little bit more industrial, well, actually a lot more industrial than gold. That could be impacted by the disruptions we're seeing from COVID more than gold. Also, mining operations in South America, particularly Peru and Chile, also impacting silver mining, which of course has led to some of this recovery. And of course, going forward, if we see maybe some uptick in things like greener technology getting a bit of a lift, photovoltaics use a lot of silver, so that could be a driver for silver as well. So a lot of things driving silver, setting the table for where you find ourselves right now. Like we said, 23.35 coming into the show here right now. Let's see where the action was out here this week. Silver, 52.6% of the paper was in the SEP contract out here this week, with the lion's share of that paper, the big print, 25 even calls. So some folks liking themselves some upside, going up 2,669 times. Let's see, the big print was actually on Tuesday, 1,100 of that, so pretty much a little bit shy of half. Going up on Tuesday, 500 today, 800 and change on Monday out there. Good chunk of that opening. So opening upside positioning on the 25 strike in silver, perhaps showing that perhaps Perhaps the bull has not abated in silver. Maybe some overriding going on out there as well. Then we drop off a little bit. Number 2, the 26 calls. So if 25 isn't optimistic enough for you, isn't bullish enough for you, 26 lighting it up to the tune of nearly 2,000. The big day was Monday, about 700 going up on Monday, and a good chunk of that opening as well. So opening upside positioning still in silver, listeners. Perhaps the bull hasn't run out of gas out here in silver, not quite yet. Then we got a tie, kind of a three-way tie for third place here, with about 1,600 of the 24 calls, as well as 1,600 of the 22 puts, as well as a little bit more optimistic bullish paper. We've got the 30 calls going up out here in D 1,600 times as well. So mostly call paper out here this week, which is kind of showing you what we thought with this protracted rally in silver. People liking the calls. The vol out here in silver has been ticking up. It's pretty juicy out here right now, to use a technical term. SEP vol, where half the paper went up this week. SEP at the money vol, 48, almost 49%, up nearly 5 points this week. So SEP vol is getting frothy. Compare that to some of the other names we're talking about. That's getting up there close to Bitcoin vol, which is about a 60 or so right now. So that's pretty frothy out here for silver. In terms of the skew, let's see. Last week, the puts, 7.4% cheap to the at the money. This week, almost 10%, 9.7%. So puts getting cheaper. And then the calls were about 12% rich this week, 13.4%. So calls getting more expensive, puts getting cheaper as we're rallying up the skew curve. Probably not surprising we're seeing that development out here. It's kind of what you might expect, especially because we have such a sharp move in silver. You're going to see more love to the calls. If it was a general drift up there, then you might see the calls come in a little bit, but we're seeing a little bit of a sharp move. So that's given more juice to those calls. In particular, it seems like those 25s and 26s that also lend support to my supposition there that people were probably buying those strikes. And that seems like that's the case, given what we're seeing out here in the skew land. Since we're talking metals, I can't get out of this segment without switching over to the big dog in the shiny stuff. That's, of course, gold. Gold has been hitting records pretty much across the board out here, listeners. Gold hitting a record settlement this week, 1953.40 back on Wednesday. And, of course, we're higher than that right now. We're at a 1957.80. So if we settle higher than that, a new record settlement. But so far, at least yesterday, record high. I'll say that again, listeners. Record high settlement in gold. Wasn't too long ago we were saying, will gold be able to sustain maybe north of 1,600? Oh, can it get north of 1,700? Surely it can't do 1,800. Yep, it can do all of those and then some, to the tune of 1957.80, where it finds ourselves right now, kicking off TWIFO here. Let's see. The lion's share of the action out here this week in gold, also in the SEP contract, 33.6%. So about a third of the paper coming in SEP. Let's see. The vol in September getting a little bit frothier, nowhere near what we're seeing, nearly a 50 in silver, though. It's about a little, actually less than half of that, about 20.6 out there. So gold vol we talked about for a while here on the show. It's kind of been a mixed bag, hit or miss. It's been anemic for some time until this recent run-up where it's gotten a little bit more life to it out here of late. The skew out here in September, puts were 2.1% cheap. They had the money this week, 4.1% cheap. So puts coming in. Let's see if the calls are getting bid up like silver. Yep. Spoiler alert, they are. 5.4% rich last week, 8.2% rich on those 25 Delta calls this week. Calls getting bid, puts getting offered. Gold up 2.5% so far this week. So not entirely surprising. Let's see if there's any surprises in the paper flow out here. In September, that was the big month, and the big dog was, you guessed it, the 2,000 calls. People like even money strikes out here. Some folks piling in, saying we might be breaking it. Of course, looks like this is closing paper out here this week, so maybe some folks thinking we won't get there and taking some paper off. Maybe folks were overriding the 2,000 strike and they're taking it off. Either way, lots of closing paper on the 2,000 strike in September this week. 17,500 contracts, the big day, actually today. 5,600 contracts, so obviously we don't know the OI change there. Monday, 3,000. Tuesday, actually take it back. Tuesday was a big day, 7,000 and change. That was slightly closing. So it seems like there's been a lot of back and forth, actually, on this 2,000 strike. Though if the call skew is to be believed, then probably net buying over here. Also saw about 5,000 of the... So the big dog by far and away was a 2,000 strike, interestingly. The next biggest strike was 5,000, not even 4,800 of the 19 half calls going up with a big day on Tuesday, 2,500. It's about half of them on Monday. and that was opening mostly. So opening on the 19 halves, churn and burn. Who knows what's going on the 2000s? A lot of paper up there. Over 3x the paper on the 2000s than there was on the 19 halves. Interesting. But again, as they're flirting between 19 half and 2000, obviously that's a strike that has drawn a lot of attention. And given what we're seeing on the skew, I'm going to say they're net buying probably on that strike as well, because there's not enough paper on the 19 halves to offset some selling. And of course, they're below. They're in the money calls now, so that's technically the put wing. So you got to look to the 2000 strike, and it seems like folks are buying juice out there. Let's go a little bit farther out like we like to do in a lot of the metals and see what's going on a little bit longer term. And 2000 strike was active in D's as well. 4,400 of these bad boys going up this week here as well, with the lion's share coming on Monday, mostly opening there. So folks opening on 2000s in D's, opening seems like mostly, even though there was some churn and burn in SEP. And that's not enough for you. 22 halves were going up out here in November, about 2,000 of those. So that's pretty optimistic paper. 2000s also active in Jan. 2000 was the strike this week, listeners. People are flocking in. Not too often we get gold at such a pivotal psychological level as 2000. So clearly that has attracted a huge swath of traders out here this week. 289,000 contracts on the tape so far this week. That's up about 60,000 contracts from this time last week. So pretty big paper, a good chunk of that coming, seems like, on that 2000 strike. So a lot to parse. We did some metals. Mr. Sean, a lot's popping off this week. Where should we take our movable feast of futures options next, sir?
Well, we've spoken about my favorite topic, equities. We've gone into metals. Let's head to the energy sector, please.
Energy. I think we can make that happen, sir. Remember, listeners, go to that drop down, go to energy, go into the crude oil, click on the WTI, and you'll be off to the races. I like to select all for the months, but that's up to you. To each their own. Could be a little bit of an overwhelming amount of data if you do that, so be forewarned. But of course, if you don't do it, you might miss some interesting flow in some of those more esoteric months out there. All right, WTI coming into showtime, still north of the 40 handle, though, even though it's just barely at this point, 40.15 on that front month future. We've said it before, the options flow doesn't seem to show a lot of support north of the 40 handle, and the futures underlying performance has pretty much lined up with that. And whenever it gets north of 40, it seems to retreat. Post-haste, doing that yet again this week, off 2.75% net on the week, or about 1.14 handles, just ever so slightly above the 40 handle out here in WTI. Let's see, where's the paper this week? Half of the paper, 51.3%, coming in the SEP contract. Everybody loves SEP. It has about 18 days to go here in WTI. Let's see, at about a 40.15 at the money strike, obviously is 40. At the money vol, interesting enough, pretty much unched, right around a 16, 15.99 to be precise out here in September. So vol coming actually about unched here, off slightly here. And then it's kind of a mixed bag in the other contracts in the weeklies. But again, you're talking weeklies, really talking gamma more than vol. At least this SEP contract has about 18 days. So it's just beyond our 2-week benchmark, our 2-week barometer for where we like to cut off when measuring skew. Well, let's see. Speaking of the skew, puts last week, 8.9% rich to the at the money in September. This week, pretty strongly bid, 14.3%. So puts getting bid up here in crude oil. That'll be our takeaway here for our producers to tweet out here. Let's look at the calls. Calls 4.6% cheap last week. This week, 8.4% cheap. So once again, no sign of life in this call wing. It cannot maintain a bid north of 40, listeners. The options traders will fade this thing over 40 time and again. And that seems to be the case out here again this week. Options traders fading WTI north of the 40 strike, 8.4% cheap on terms of the call. So calls coming in, puts getting bid, kind of the tail of the tape week in, week out here in WTI. Let's see where the action was with all that SEP paper going up. What was the big dog this week? And it wasn't maybe the strike you might think. It wasn't the 40s. Nope, it was the 45 strike, doing almost 10,000 contracts. The lion's share on Monday, 3,200. Today, almost about 3,000. So today, catching up to it as well. Big opening paper on Monday. So some folks may be thinking we're going to make our way up to the 45 strike opening there, or probably more likely, given the paper we've seen in the past out here, historically in WTI, overwriting the hell out of that 45 strike and saying there's no way in heck we're getting anywhere close to that. And that's pretty much, the skew seems to be bearing that out there, listeners. Probably overwriting paper as well, followed by number 2 out here, actually the 40 even puts. So it didn't take too long to get to the 40 even strike out here. About 7,600 of those, the lion's share today. Almost 3,000 on the tape today, 2,000 yesterday. A lot of opening put paper here throughout the week, hence the puts getting that bid, and hence the calls getting a little bit crushed out here. Also worth noting, 7,600 of the 33 puts going up in September as well this week. The lion's share on Monday. 4,000 of those bad boys, 2,800 today as well. So 33 puts, that's an interesting strike. And then right behind it, the 35 puts also in 7,200 of those. The big day today, 3,000 today. So maybe some verticals going up today, 33, 35, 40. Either way, interesting strike selections out here. But the 40 puts the big dog on the put side of the ledger, even though not by much. Only a couple hundred contracts separating them from the 35s and a couple of dozen separating them from the 33 puts. So interesting strikes. Obviously, folks, not feeling the love here for crude, thinking we're probably heading back down south of the 40 handle and going to do so in fairly short order out here. Let's go out really quickly, see if you see any other weird prints. I like to go a little bit farther out in the term structure. If you're looking for call paper, you got to go out to March of next year to see the 50 calls going up 1,150 times today, a total of about 1,800 times on the week, even though a lot of that was closing on Monday. So don't have today's OI numbers, obviously, but a little bit of action on the 50 strike. So maybe that, read into that what you will. Crude bulls looking for a sign. The double call is also doing pretty decent paper in Dece of next year. That's a 55 strike, listeners, doing 3,700 contracts here on the week. 1,700 yesterday, 1,700 today. That's interesting. And yesterday's paper was half opening. 850 of that was opening. So weird stuff afoot here on the 55 strike in Dece of 2021. I'll have to dig into that a little bit more to see what the heck is afoot. But we got to keep rolling with the show. Sean, it's been lighting it up a lot here on our movers and shakers. This week, it's live cattle's back. It's number 5 on our upside. Last week, it was number 1 to the dark side, off 1.5%. Week before that, it was number 2 to the dark side the light side, up 6.68%. So I think that might merit a little bit of an inclusion of live cattle on the show. What do you think, Mr. Sean?
Let's go for it. Yeah, it's been a really interesting live cattle market. Listening to your show, I've been hearing the numbers. So I think live cattle's absolutely worthy of a very good discussion today.
I'm hearing rumors of a FTSE Russell live cattle index coming soon. Any truth to those rumors? Small cattle, small caps.
You know, I gotta say, we do listen to our clients, and if they come to us, we listen, we do analysis, and if there is the need for a various index product, we definitely take it to heart and do as much analysis to see if our markets and our investor community would benefit from such an index. So I think your listeners know how to find me. So we are one of those companies that listen to client demand.
Well, you know, you've carved out a good niche on the small equity side, maybe the small cattle side. What do you think? All the cattle under a certain size. What do you think?
You know, we have small caps. Are you saying small cattle?
Yes, I'm saying small cattle. I think we can do this. Let's make it happen. I'll get my trademark guys on it after the show. What do you think?
We have large caps, so we can have large cattle and small cattle. So,
see, it writes itself.
Interesting concept.
And I'm only going to take a very generous 33% of all the action, just for coming up with that. That's all. Very, very. Our lawyers can deal it out after the show, but I think there's something to it. Small cattle, large cattle. I'd be down for that. And meanwhile, all the cattle are lighting it up here this week, listeners. Live cattle at a 102.17 fine. You can find these guys, by the way, in the drop down under the ags. Listen, under agricultural, head on into livestock and then pull up the live cattle. You see for yourself. Actually doing a fair amount of paper. You know, there wasn't a huge option story to be had in live cattle in the past. Certainly when we kicked this show off, it was pretty anemic. But these days, pretty robust. 23,000 contracts on the tape as of a few minutes ago. That compares to last week, 18,000. So A lot more on the tape, 5,000 and change on the tape since last week. So that's a good little run here for live cattle. I mean, it's no Eurodollars, but compared to what it used to be, it's certainly not 123 contracts like lumber. If you're wondering, by the way, the other cattle, feeder cattle, a little bit lighter, 3,200 contracts on the tape. So let's head out to live cattle. That's what's moving. That's what's shaking out here. A lot of things have been driving the cattle futures market for a while here. We've seen softening corn futures. Of course, you have to feed this cattle, so cheaper corn makes it a little bit more profitable to run a feed lot. So that's kind of helped on the futures side. Of course, on the other side, the flip side, demand. Where's the demand coming from right now with most of the supermarkets shut down, travel shut down? So Labor Day is usually a big time for celebrations and cookouts and a lot of cattle demand on that time. That's probably shut down. School lunches, maybe not really happening, or at least not in the way they used to. So that's going to kill a lot of demand for beef. So the demand uncertainty has also been weighing. It's kind of been this weird push-pull between some of these other factors that are maybe bolstering cattle a bit. Of course, other factors that have been leaning on it, which hence the volatility we've seen in cattle of late, moving to the top of our movers and shakers and to the downside. Let's talk about that vol, actually, because they said that front future has about 8 days to go. 102, 175. Is that a 41 vol? That's the front future. That's hard to parse. That's up 20 points. Let's get away from that because that's kind of insane. Let's go to a little bit, even that's where most of the paper was this week. Let's go out. 36.5% of the paper was in that front future. So we'll have to look there. But beyond that, let's go to a little bit saner contract. Let's go out to October. We're about a quarter of the paper went up this week. So still a pretty active contract. Let's see what the vol is out there. This makes more sense. 26.3. So up 5.5 points. So very volatile, very robust, but not the insanity of a 41 that we saw in that front contract. That sounds more reasonable for live cattle out there. Let's go back to that AUG contract. That's where the paper was this week. In terms of the big prints out here, 101 calls. Actually, no, I'll take that back. Let's go back out to October because that's easier to parse the skew and the vol. The vol, like I said, was 26.3, and the puts last week 9.8% rich at the money. This week 15.4%. So the puts getting bid up, listeners. Calls, 11.8% cheap last week. This week, 10.4% cheap. So calls getting a little bit more bid, but the puts definitely getting bid out here in October. And let's see, the biggest print of the week was actually out in October, even though most of the paper, 36.5%, went up in that AUG future, in that AUG contract. The biggest print was actually in October with the 94 puts doing about 1,243. So that's the biggest print out. It followed hot on its heels by the 120 calls in Dees with almost 1,200 as well, kind of showing that weird bifurcated nature of the paper we're seeing out here. Upside calls, 120 calls, downside puts, also doing equal numbers of paper, opening a lot on those calls, by the way, in Dees. Pretty opening paper. Let's see what the puts, if they were similar opening paper. The big print for them was on Monday, 613, a good chunk of that opening. So interesting paper afoot here, out of the money puts and out of the money calls, kind of showing what our skew is reflecting out here. There's a lot of interest and demand on both sides of the paper here, on both sides, the call wing and the put wing, and a lot of maybe coin flip as to what the hell is going to happen next here in live cattle. 101 calls going away this week, also pretty active at about 1,100 contracts. The big day was Wednesday, 325 of those bad boys out here. So live cattle getting a little bit of love here on the show this week. You guys like esoteric products? We're delivering them to you in spades. You know, your buddy Dan was on the show last week, Sean. He likes himself a little FX. What do you think? Should we round out our analysis here with a little bit of pound dollar in honor of your buddy, sir? I think you're shocked into silence there, Sean, so I'm going to answer for you.
Oh, sorry.
There he is.
I did the old mute. The old mute because I have a dog and I'm trying to keep him from joining the show. Yeah, I just said we're our parent company is the London Stock Exchange Group. So let's go British pound versus a dollar. Let's have a little chat about foreign exchange. It's an interesting topic, the dollar.
Let's see, Russell, small currencies, huh? I think you can corner the market on all these small things, Sean. The sky's the limit for what you guys can put out there in terms of licensing. And again, my cut, very small. What do you think? You
keep referring to small. We're huge.
Yes, you're huge in the smalls. I like it. We're big in small things out there. Of course, the Russell 1000, not that small. So I guess it kind of depends your frame of reference. Let's head on out here to the pound USD, one of the big dogs out here in the FX world. Nice to see FX on our movers and shakers. People are always writing in asking about FX, and there's never really a lot of activity to merit it. So this week, let's see what's on our radar. That front future at about a 1.3091 to be precise out here on that pound dollar, listeners. But the lion's share of the action was actually out here, looks like in the AUG contract that has a whopping 7, almost 8 days to go. 44.2% of the paper out there. The vol is a whopping 9. That just shows you why FX doesn't make it on our radar all too often, listeners, because the vol kind of anemic, the activity kind of light. But now and then we got to dive right in. Let's see. The skew. We'll break our rules out here this week, listeners, because the contract that has the lion's share of the paper has 8 days to go. That's this AUG. Looks like the AUG contract. Yeah, AUG contract has about 7 3/4 days to go, to be precise. The puts last week, 0.6%. Cheap to the at the money this week, 1.2% rich. So puts getting a little bit bid up. Calls, 2.4% rich this week, 1.5% rich. So calls coming in, puts getting a little bit bid up as the net spread is up 0.03% here so far this week. So quiet since Monday, but net since last show has moved quite a bit. 1.31 is where the action is. Let's see where the options action is. Yes, it's 1.31 as well. So pretty much at the money calls doing the paper here with about 1,571 on Tuesday, 500 and change today, total of about 2,351 on the week. A good chunk of that opening. So opening near out of the money calls here to lead the dance in the AUG contracts out here. So a little bit of near opening upside in pound USD. I'm trying to look to see any other esoteric strikes or activity of note that's really dominating the tape. By the way, if you're wondering how much options paper pound USD does, 18,407 this week, up from 12,000 last week. So put that in frame of reference. Live cattle blowing the doors off pound USD from an options volume perspective. So another reason why FX doesn't make it on the show that often. But every now and then, interesting stuff. If you have a weird, unique, esoteric FX pair you'd like us to break down, hit us up. Speaking of you guys, it's time for you guys to take the reins. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, welcome to your segment, Futures Options Feedback segment. Let's see how many of you guys we could squeeze in our remaining minutes. Let's go out first to Spar with 2 R's. Spar wants to know, just simple question, is it a slow week for small caps? Sean, I think this just goes to show, Sean, how much people have been maybe jaded by the recent mad volatility out there in small caps, because it's not really a slow week. I mean, right now, the small caps are off about 0.5% today. And then net on the week, we saw actually a bit of a rally. It was up about, I think about 2%. Let's get the precise number here. It was up about close to 1.99%, I think, where it was net on the week out here. Yeah, actually north of that now, 2.08% right now. So it's rallied even more since then, even though it has sold off net today out there. I guess, Sean, people are just kind of spoiled by the amount of activity they've seen of late in small caps. Is that your take as well, sir?
Yeah, they're Spar. Great question. It's actually not a slow week at all. It's just slightly slower than some of the crazy swings we've been seeing in the marketplaces over the last several months since this pandemic and economic situation has hit our country. But yeah, you got to keep your eye on small caps. The weights in the small caps are really interesting. There's the financials, the healthcare and technology sectors of the market are the heaviest weights within the small cap, the Russell 2000. So keep your eye on those. Keep your eye on the markets. Keep your eye on incentive plans for small businesses here in the United States. Russell 2000 is pretty much a domestic index, right? So things that are going to stimulate the U.S. economy are things that will help move this market. Not to mention, earnings season is the other thing that drives a lot of these companies as well. So keep your eye on all of that and keep trading. But yeah, slower than some weeks, but the market's still moving, and it's exciting that these markets are just tremendously tradable as well. But great questions, Bar.
Next up, Tigger 3. I prefer Tigger 1 and 2, but hey, to each their own. They want to know, can you explain to me how the futures options products can change so much on the QUIKSTRIKE in 1 week? The product can be on the top of your light side report 1 week and on the dark side report the next. I don't understand what to make of it or how to use it to trade the markets with sometimes such extreme changes in 1 week's time. Well, that's kind of what makes it fun doing this show here, Tigger 3, is that you never know what you're going to get. It's like a box of chocolates. You never know what you're going to get here on the show because there's so much going on in so many different and sometimes diametrically opposed product categories that it's not like you're going in. If we're doing the odd block or the option block show, probably going to talk your Teslas, your Apples, your Facebooks, your Googles, your people. You guys love those things. SPY and VIX. That's going to be the deal on our Volview show. Going to talk VIX and spikes and a few other things and VXX. This show, we don't really know outside of a few that really have a lot of demand behind them, like WTI and maybe gold and some of the small caps and things that have a lot of interest behind them right now. You never really know what's going to make it on the show week to week. Live cattle on the show this week. Pound USD on the show this week. They weren't on in recent weeks. So it's kind of fun. It makes it that kind of more of a, spin the wheel type of mentality. You pull up the show, you see what's lighting it up, and you're off to the races. That said, we do use a percentage change scale. So that's going to favor some of the smaller ones like NatGas, for example. NatGas is not on this week, but most weeks it's jumping to the upside or to the downside, up 12, 14, 15%, down 8%. The reason for that is pretty clear. NatGas is a pretty cheap product. It's about shy of $2. It was $1.82 coming into Showtime. So it's easy for smaller names like that to have big percentage swings and to make it onto our list as a result. But that said, they're not all small names. I mean, lumber is dominating our tape out here this week, and that's a $579 product. So it's not all that. These products have a lot of vol. Cattle, cattle right now, what we say, it was 102 out there for live cattle. Again, not another cheap product, but a very volatile product. And that front contract has a 41 vol, for God's sake. So as the vol is manifesting in these underlyings, you're going to see a lot of swings. So I think it's very informative to tell you what's going on, what's lighting up the tape, what's dominating the tape this week. Unfortunately, not all of these are optional. Well, they're all optionable, but not all of them have a lot of option flow on them. But in general, seeing where the huge swings and swells of underlying futures volume and movement is usually pretty indicative of something interesting going on with the options as well, which is why we use it as our barometer. And also, it's pretty easy for everyone to understand. If we start doing, people have asked in the past for, you want a skew report, you want a vol report. Start getting into those things. They're a little bit more esoteric, a little bit harder for people to understand what the hell we're doing, and also highly subjective, how you compare one versus the other. Net futures underlying movement is very straightforward. It's very easy for people to understand. And it produces dramatic swings like this, which is why we like it. So it's informative. It's a good red flag to wave in your face, Tigger, and say, hey, something's going on there. You might want to investigate it. We tend to do that on this show, but you're also welcome as yourself to go check out these reports for yourselves and do a deeper dive into whatever product it is that catches your fancy, and maybe you want to trade it as a result of that. So it's a good starting point, Tigger, to begin your analysis for your own trading. Sean, would you concur with that as well? That's our use case for these big movers and shakers out here, sir?
I do. I couldn't add to that. That was just a fantastic explanation, and I hope Tigger 3 hears all that, because you did it. You nailed it, Mark. That fantastic explanation.
Are you like me, Sean?
But also I like Tigger 3 asking the question. So
are you like me, Sean? You prefer Tigger 1 and 2, though? They're much better.
I smile when I look at and I hear you say Tigger, and then you hesitate and then say 3. So it's actually funny because it brings back my childhood and Winnie the Pooh and all that stuff. But anyway,
who doesn't love a good old Winnie the Pooh joke, right? It's always good, always timeless, sir. Always timeless. All right,
always
next up, another good handle, Cool Soupy. Cool Soupy. We were talking on the network not too long ago about and on the show last week about silver outshining gold, and he chimed in and said, yeah, inflation comes when you print trillions of dollars. You ain't seen nuttin', and he spelled nuttin, Nuttin, in all caps to emphasize his point. You ain't seen nuttin' yet, with about 18 exclamation points up. Yeah, I'm kind of with you there, Soupy. That's obviously been a big driver of the precious metals, as well as the massive potential inflation implications of the just seemingly endless printing of money we're doing in Washington right now. A lot of libertarians out there and other fiscal conservatives, and even a lot of the folks on like the crypto side of the space tend to look askance at that sort of thing. And you don't have to be pretty far down the rabbit hole of that stuff to start looking at this yourself and saying, this is a lot of money manifesting out of nowhere. What are the maybe unanticipated implications of doing such a thing? And you're right, that probably is driving a lot of the interest here in silver and indeed gold. Maybe we haven't seen Nuttin, Nuttin yet. Cool Soupy. Cool Soupy. All right, we got time. Let's see. I think we got one more here, Sean. This comes from Talos. Sounds like a sci-fi villain. Talos says, is there any benefit to selling puts on IWM versus the RUT versus the mini Russell 2000? Are the SKUs and the premiums pretty much the same? Well, Sean, these are all various flavors of your baby here. What do you have to say here for Talos? He's looking to harvest the old risk premium, and he's not sure where he should send his flow, sir.
It's a great question, and something that Talos should have in his equation is the products themselves, right? The RUT options that trade exclusively at CBOE are a bigger product than the IWM. RUT is the product is 100 times the index, so you got a much bigger notional value of a contract. The IWM is 1/10 that size, only 10 times the index, and options at CME on the mini Russell 2000 are options on the future. So you got the securities options, IWM and RUT, and you've got futures options on CME, which are only 50 times the index, equating to one futures contract. So there's different products. There's different product specs. I lean towards RUT because there's bigger bang for your buck, and I also like the you can hedge all of these with CME Russell futures. So it's the RUT product, the mini Russell options. The underlying for all three of these is the Russell 2000 index. And I'll leave it to you, the expert, in terms of talking SKU, Mark. But I'm pretty sure that in terms of implied vols, they're going to be close. But it's a matter of the Talos's desire in terms of size of a contract, and also the spec, whether he wants an option on a future or he wants a SEC regulated index option. So there's some differences, some nuances that Talos needs to have in consideration there. Yeah,
you hit the nail on the head, sir. It pretty much comes down to size, what you're looking to do out here. Talos, I mean, the SKUs, the premiums, they're going to be within the ballpark of each other. Not going to be any major difference. You might see a little bit spike here and there, a little bit difference due to the different order flow, but not going to be anything outlandish. Because if there is, guess what? Some of these big firms are going to come in and arb it away. So you as the 10-lot retail guy, and I'm assuming maybe your size up, I don't know. But a lot of our audience in this show is retail. Then, you're not going to be a huge discrepancy there. I wouldn't concern yourself about that as much as I would, as Sean broke down. The difference in the underlyings is huge. You want to primarily in a securities account, then you probably want to go IWM route. If you want to go the futures options, then you go with RUT and the mini. And, of course, the futures versus and the contract multiplier. There's a lot of, it's mostly boils down to what kind of size you want to do and how comfortable you are doing a futures option versus a security type product like an IWM. You listen to a show like this, so I'm guessing you're probably pretty comfortable. Maybe you want to dip those toes in the mini. Sounds like size may be an issue. So maybe you start with the mini, and then you work your way up the big dogs as time allows. Unfortunately, speaking of time, ours is up, Sean. That music means we come to the end of an interesting sojourn through the world of futures options. We talked some lumber, we talked some metals, we talked some equities, we talked the old silver and gold, talked some live cattle, and even got some FX pound USD on the show, as well as a whole bunch of your questions. Keep them coming. Cool, Soupy, Tigger, Spar, everybody else who wrote in was more we didn't get a chance to get to. We'll get to you on future episodes. But before we go, Mr. Sean, if folks have questions here, like Talos and a bunch of others, but all things small cap, Spar was the other one here, where should they go? What should they do, sir?
Reach out to me personally, smith@FTSERussell.com. Please go to FTSE Russell's website, FTSERussell.com. But you also can go to CBOGlobal.com and also CMEGroup.com for just a tremendous amount of information on all your FTSE Russell products and derivatives that trade with our partner exchanges here. So feel free to reach out to me. And Mark, again, thanks for having me on the show. It's always great to be here.
We're happy to have you. Check them out. FTSERussell.com for all that info. Give him a follow on the old Twitters as well, at FTSE Russell. Hit the man up if you have questions. He's been nice enough to give you his address at Sean Smith, at FTSERussell.com is a place to go for some of these questions like Spar and Talos and others. You don't have to wait till showtime, and we welcome you on the show here as well, but you can always hit up Sean in between with more of these questions. He can get back to you with the data and the numbers in between episodes. Speaking of data and numbers, if you want more of that in between episodes, you know where to go. CMEGroup.com/TWIFO. You can also check out some of these great articles like they have on the open markets, as well as, of course, all the great research coming out of Blue and Eric and the team over there. We always crunch that stuff on the show as well. But the place to begin your voyage over there, CMEGroup.com/TWIFO or /TWIO. Either one should work. Get you to the fun reports. Get you off to the races. Again, want to do fluid milk at 3 a.m.? We don't judge. Have fun. Have at it. And on behalf of Sean and our friends over there at CME, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in such great questions. Remember, if you like what you hear, keep those reviews coming on your iTunes and your Google Podcasts and Stitchers and Spotify's and everywhere else to help new folks continue to discover the program and indeed the network. And we'll see you back here tomorrow, 1 p.m. Central, for a little bit of volatility talk on Volatility Views. And then we're back again on Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/ Options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.